The energy landscape is undergoing a transformation. A recent decision by China and Australia has reverberated through global markets. They have collectively chosen to cease imports of liquefied natural gas from the United States. This move carries significant geopolitical and economic ramifications. It hints at a possible shift in the global energy power dynamics. This isn't merely a trade decision, it's a strategic maneuver with extensive consequences. The decision underscores the growing complexity of global energy markets. It also highlights the increasing significance of regional alliances. The move has ignited intense debate and scrutiny. Analysts are delving into the motivations and potential impacts. One thing is certain, the traditional global energy order is evolving. We are entering a new era filled with both uncertainty and opportunity. Energy has always been a cornerstone of global geopolitics. Nations rich in energy resources hold substantial sway. Dominance over energy trade routes can influence international relations. The geopolitical landscape is currently experiencing significant shifts. China's emergence as a global economic giant is a major factor. China's voracious energy appetite has transformed global markets. It has become the largest energy consumer in the world. This has sparked fierce competition for resources and influence. The United States, once a leading energy exporter, now faces new challenges. The shale gas boom turned the U.S. into a major energy producer, yet the global energy focus is shifting towards renewables and regional alliances. The move by China and Australia to stop U.S. LNG imports underscores this evolving dynamic. It emphasizes the need to grasp the intricate interplay of economic and geopolitical factors in the global energy market. The China-Australia decision has immediately caused market upheaval. The U.S. LNG sector, previously thriving on Chinese demand, now faces uncertainty. American energy exporters are urgently seeking new markets for their excess supply. This upheaval has sent shockwaves through financial markets. Energy stocks have been volatile in response to the news. The long-term effects on energy prices are still uncertain. Nonetheless, the decision has introduced a new level of volatility into the market. This upheaval underscores the interconnectedness of the global energy market. Actions by one group can trigger cascading effects worldwide. It also highlights the risks of depending on a limited number of trade partners. The situation continues to evolve. How the market will adapt to this new reality remains to be seen. This disruption serves as a stark reminder of the complex and ever-changing global energy landscape. To grasp the importance of this shift, we must delve into the history of energy trade among the US, China, and Australia. Recently, the US has become a leading LNG exporter, leveraging the shale gas revolution. China, with its increasing energy demands, has been a crucial market for US LNG. Australia, another key LNG producer, has also been a major supplier to China. This triangular trade relationship has been influenced by both economic and geopolitical dynamics. The US, aiming to reduce its trade deficit with China, has turned to energy exports to help balance trade. China, seeking to diversify its energy sources and lessen dependence on the Middle East, has embraced US LNG. Australia, while competing with the US in the LNG market, has also gained from China's rising demand. Nonetheless, recent geopolitical tensions, especially between the US and China, have strained this triangular trade. The move by China and Australia to stop US LNG imports can be seen as a result of these tensions. This indicates a possible realignment of alliances in the global energy market. Section 5. A calculated move. Decoding China and Australia's strategy. China's and Australia's decision to cease US LNG imports is a strategic maneuver driven by both economic and geopolitical factors. Economically, China aims to secure better pricing and long-term supply agreements. By cutting its reliance on US LNG, China gains bargaining power with other suppliers, including Australia. This strategy also enables China to focus on its domestic energy production and renewable energy initiatives. By lessening its dependence on imported LNG, China can invest more in clean energy sources and lower its carbon emissions. Geopolitically, this move strengthens the bilateral ties between China and Australia. By aligning their energy strategies, they reduce dependence on the US and foster a more autonomous energy market in the Asia-Pacific. This action also signals to the US that its trade and foreign policies have repercussions. By altering the current energy trade landscape, China and Australia are asserting their interests and shaping a new geopolitical framework. Chapter 6. Market Ripples. The China-Australia agreement is already making waves in the global LNG market. LNG prices have become increasingly volatile. Traders are scrambling to understand the long-term effects of this move. The U.S. LNG sector is now facing a period of uncertainty. American producers had aimed to boost their exports to China. They are now seeking new buyers in Europe and other parts of Asia. There's also a noticeable shift towards regional energy independence. Nations are becoming more conscious of the dangers of depending on a single supplier. They are striving to diversify their energy sources and ensure their own energy security. The China-Australia Pact serves as a wake-up call for the global energy market. It underscores the necessity for adaptability and flexibility in an ever-evolving world. Chapter 7. The Global Energy Landscape. A New Era. The China-Australia agreement could significantly alter the global energy landscape. This move might speed up the shift towards renewable energy. As nations aim to cut down on fossil fuel dependency, investments in solar, wind, and other renewable sources are expected to rise. This transition could open up new opportunities for countries rich in renewable resources. It might also lead to the development of new energy trade routes and partnerships. This decision could spark geopolitical competition as nations vie for access to essential energy resources and technologies. This rivalry could manifest in various forms, from diplomatic talks to economic sanctions and even military maneuvers. The global energy landscape is stepping into a new era of uncertainty and change. The old system is evolving into a more intricate and multipolar framework. Adaptability and strategic foresight will be essential for navigating this new landscape. Chapter 8. The Need for Adaptability and the Rise of Regional Energy Hubs. The China-Australia LNG agreement highlights a vital lesson for the future of energy. Adaptability is essential. No nation can afford to remain static in its energy strategy. The global energy landscape is being redefined. Traditional alliances are being reconsidered. This new era demands flexibility and vision. Nations need to diversify their energy portfolios. They must invest in renewable energy technologies. Strengthening regional energy cooperation is crucial. The rise of regional energy hubs is a significant trend. These hubs can enhance energy security for member countries. They can also drive economic growth and regional integration. The China-Australia partnership exemplifies this shift towards regional energy independence. This development will have a lasting impact on the global energy market.